In this video, we'll learn about a simple trading pattern that will enable us to get entries on the M15 time frame and book 50 pips on each and every entry. So it's basically looking for an M15 base. From that base, we now start to look for an entry point. That entry point should give us 50 pips. So make sure you stick up to the end of this video so that you fully understand how to go through this whole process. So this trading pattern mostly occur on GBPUSD or pound against the dollar. A lot of traders trade volatility indices and other indices. You can as well apply this on those ones. The time frame of observation is the M15 time frame, which is basically 15 minutes of chart candlesticks, and will employ 3 indicators, and these will not be used as market predictors but as aids. I've seen several strategies that bases on crossovers and say if it crosses over on this direction, buy, or on that direction, sell. But in this case, we are not using these indicators as market predictors but as aids. So the next slide will actually show you how you need to set up your chart. So basically your chart should look like this. We have 3 indicators which are exponential moving averages applied to close. We are going to be using the 13, the 50 and the 200 EMA. Basically all these indicators are very important in attaining our entries. Before we define this pattern, please hit the subscribe button as well as check the notification bell icon so that you won't miss any of our content as we upload. We also have a free signals Telegram channel which we plan to send a lot of free signals in this coming year. The link is right in the description box below. So here's the pattern definition. Here are the steps of taking the pattern in subject, which is the pattern we've said it's one repeatable pattern and most effective on pound against the dollar. The first thing is to put your charts on the M15 time frame. After putting your charts on the M15 time frame, you need to see a 50 EMA crossing a 200 EMA. This actually gives you an idea of the bias. A 50 crossing a 200 is actually giving you an idea of a bias. A downward crossover means the short-term bias is down, and an upward crossover means the short-term bias is up. So in this case, let's say this is the 200 and that is the 50. This is the first step. Then price, let's say this is the price, it must come back to the 200 EMA to create the best region. So the point we call the best region is basically a 200 EMA retest. So when the price comes to retest the 200 EMA, we create the best region. From there, from that best region, we now expect to see a 1350 EMA crossover. There should be another crossover after a best region has been created, and entry will now be made at candlestick reversal pattern that will be issued at 50 EMA retest as shown below. So what we are saying here is the first step is we need to see a 250 EMA crossover on whatever direction that we are coming. In this case, it will be a short-term downward bias. Then from there we need to see price retesting the 200 EMA as step number 2. So price retesting the 200 EMA will create what we call the M15 base. Then from that base we need to see step number 3, which is a 1350 EMA crossover to create or to lock that particular base, and then retest of the 50 EMA is where we actually get our point of market entry. We should actually get a candlestick reversal pattern at the retest of the 50 EMA. So let's now go over the charts to see proper examples in real markets. So if we recall very well, we would say that the first step is to see a 200 EMA crossover. In this case, the 200 is the white one, the 50, the blue one, and then the 13, the red one. So the first thing is 200 crossing 50 to actually give us a short-term bias. The next thing is creation of what we call the best region. The best region is created with the price retesting the 200 EMA at this point, right? From there, we now need a 1350 EMA crossover to lock that best region, which occurred at this point. And then the next thing is now to see a candlestick reversal pattern at that at the 50 EMA, which is at this point. So it's 250 EMA cross, creation of best region, then lock of the best region, then retest of the 50. Candlestick reversal at the 50 is where we'll actually make our entry at this point, and our take profit is supposed to be 50 pips. So from this point we can see that 50 pips was actually attainable. We move on, we can see change of bias by 50 200 EMA cross. The next thing is creation of the best region. That is now what we are waiting for. A best region has been created since the market has come back to the 200 EMA at this point. So after a best region has been issued, we now need to see lock of that best region with a 1350 EMA cross, which is this one. From that, we need a retest of the 50 EMA to give us an entry point, and on that retest we need to see a candlestick reversal pattern which occurred at this point. We can see an engulfing pattern that occurred at this zone, right at this point. That is where we actually made our entry and 50 pips was actually attainable. So basically that is what we'll be doing. Those 4 steps will actually lead you to profitability, and mind you, it's not 100% winning strategy. Nothing under the sun can give you 100%. One time in the future it will definitely fail. So you need to always apply proper risk management in doing everything involved in trading these securities. On that note, we come to the end of this video. Thank you for watching. Like and subscribe.